All right, let's jump right into this explainer because we are looking at an absolutely massive, historic market event that demands our immediate attention. Now, when an entire index surges nearly 8.5% in a single trading session, it is so easy to let the headlines scream bull market and just leave it at that. But as focused investors, we know better, right? We have to systematically organize the market signals and separate them from the noise. Today, we're going to unpack the exact anatomy of the KOSPI's explosive surge. We'll clearly distinguish between the technical factors that drove the price and the true fundamental market direction so we know exactly what needs to happen next for this rally to actually survive. Here's our roadmap for today. We're covering the surge reality, the noise of the mechanical squeeze, the signal of the structural AI cycle, the hidden beta rotation, and finally, the macro playbook. Let's kick things off with Section 1, the surge reality. To figure out where we're going, we first have to fully grasp the sheer magnitude of what just happened. Plus 8.42%. Boom. The KOSPI closed at a staggering 7,815.59. I mean, just take a second to process that number. Moves of that velocity across a major national index are incredibly rare. It's literally the kind of day that makes careers and completely ruins short sellers. But it forces a really vital question that we've got to answer right now. Was this the start of a brand new sustainable bull market, or was it just a massive mechanical illusion? If you were watching the boards on May 21st, it was just an absolute sea of green. Heavyweights completely dominated the day. You had SK Hynix rocketing up 11.17% and Samsung Electronics jumping 8.51%. When a surge is that widespread, it's so easy to get swept up in the euphoria. But our job is to deconstruct this anatomy. We need to know how much of this buying was fresh money confidently entering the market and how much of it was trapped money desperately trying to escape. Which brings us to Section 2, the noise, or the mechanical squeeze. We have to pivot from the sheer visual reality of that rally to the hidden mechanics underneath that created such insane velocity. To understand a single session surge of over 8%, you've really got to split your analysis into two distinct buckets: technical noise versus fundamental signal. The technical noise, that's your price transmission mechanism, stuff like institutional buying, blindly absorbing foreign selling, creating a massive short cover squeeze. The fundamental signal, on the other hand, is the long-term structural reality, like genuine AI chip demand and hard export data. Basically, the surge was fundamentally justified, but it was technically executed. And the compression in short interest over just 3 sessions, that is the absolute smoking gun for this technical noise. Check this out. We went from a massive 20.13 trillion Korean won in short interest down to 2.70 trillion, and then it absolutely plummeted to just 700 million won. That is the literal definition of a mechanical squeeze. Institutions poured in 2.90 trillion won in net purchases, soaking up all the foreign selling, and that triggered a panicked liquidity bridge as short sellers rushed to cover their positions. It's explosive for sure, but crucially, that kind of fuel is totally temporary. Let's move to Section 3, the signal, focusing on the structural AI cycle. Okay, so if the short squeeze was the explosive fuel, what was the actual spark that ignited it? Well, it comes down to structural justification. NVIDIA reported a massive FYQ1 2027 data center revenue of $75.2 billion. That's up 92% year over year, which is their 12th consecutive record quarter. And they paired that with huge $91 billion Q2 guidance. Now, combine that with South Korea's May 1st to 20th semiconductor exports hitting $22 billion. That is up 202.1% year over year. This isn't just a random blip. This data confirms a long-term structural AI infrastructure investment cycle. This was the fundamental excuse the market was waiting for to trigger that technical squeeze. Now for Section 4, the beta rotation. Things get really fascinating here. While the broader index was surging, the smart money was making a very quiet hidden move. We're talking about market canaries, those hidden divergences that reveal where capital is actually flowing. Between Samsung Electronics and SK Hynix, a clear logic builds, and this is our first canary. Despite SK Hynix gaining an incredible 11.17% on the day, foreign investors actually net sold 788 billion won of it. Think about that. They sold right into the massive rally. At the exact same time, they net purchased over 1.09 trillion won in Samsung Electronics. So what's the takeaway? Foreign investors weren't abandoning the semiconductor sector at all. Instead, they executed a beta adjustment rollover. They rotated out of the highly volatile high beta HPM leader and parked their capital in the lower beta diversified safety of Samsung. They were taking risk off the table, not adding it. Which brings us to our second canary, the Korean won. On a day of historic, almost euphoric index strength, the won actually depreciated, weakening by $8.7 to hit 1,505.4 against the dollar. Now, this is absolutely crucial. When a stock index goes straight up, but the local currency weakens, the currency market is flashing an independent signal. It's telling us that the proceeds from those foreign equity sales were being immediately converted back into dollars. The net direction of foreign capital on a historic plus 8.42% day was actually heading out the door. Finally, Section 5, the macro playbook. So we've done the postmortem. We know this rally was fundamentally justified by AI demand, but it was mechanically driven by a short squeeze, while foreign capital quietly de-risked in the background. So I want to pose this question directly to you. Since that short cover fuel is mathematically spent, remember, we're down to just 700 million won, what is the next propellant? Without the mechanics of a squeeze to just blindly drive prices higher, this market absolutely requires fresh, active foreign net inflows. Without new buyers stepping up, the rocket simply runs out of fuel in midair. So how do we know if those new buyers are actually going to show up? Well, we rely on a specific checklist of U.S. macro variables that are going to dictate true market direction in the next session. First up, semiconductor validation. The SOX index has got to hold above 11,400 to keep that bullish bias intact. Second, demand confirmation. We really need the Philly Fed manufacturing index to print above 15. Anything below that is flashing in demand slowdown. And finally, risk sentiment. Keep a very close eye on the Nasdaq futures validation line at 29,379.50. Stack these metrics together, this is your definitive roadmap. As we wrap up and look out over the Yoito Financial District, let's lock in the big picture here. The KOSPI's historic 8.42% gain was a total masterclass in market mechanics. Yes, the AI supercycle provided the fundamental story, but it was a violent short squeeze that provided the actual price velocity. And underneath all of that noise, foreign capital used the liquidity to quietly reduce their risk. So the next time you see a massive single-session breakout, don't just blindly chase the green. Ask yourself, is this a structural shift bringing in fresh capital, or is it just another temporary liquidity bridge? Keep your eyes on the data, trust the macro playbook, and I'll see you in the next explainer.